Hello, everyone. Welcome to another Webinar Wednesday. Today, we're happy to be joined once again by insight provider Osbert Tang. Osbert will walk us through his 2021 high conviction idea, specifically the pair trade long Air China, short China Southern, and whether it's still a viable opportunity today. Osbert wrote about this in his insight of the same name, which is linked in the registration page. I really encourage you to take a look at it after this. A few words about Osbert. Osbert is an equity analyst with over 20 years of experience focusing on China transport, infrastructure, industrials, and utilities. He has been based in Shanghai since 2003, accumulated more than 15 years of on-ground knowledge on the Chinese economy and financial markets, and has a wealth of contacts with China corporates and government entities. Osbert, welcome back to the webinar. We're very happy to have you once again.
Hello, thank you, Michael, and also thank you, Smartkarma, to organize this webinar. Today, I think it's just a day before the Chinese New Year Eve, so we're happy to have time to share with you one of my idea, that's 2021 high conviction idea. I hope that everybody can see the slides that I have put in front of you. My key idea is long Air China and short China Southern at the same time. This pair trade, I would believe that would be one of the best performing one in this year. So during the course of the next 15 to 20 minutes, I'll just walk through this presentation deck, and then that would followed by a Q&A. So feel free to ask questions in case you have anything I want to talk about in this pair trade. First of all, I would like to take everybody have a look on so far the performance of China Southern against Air China since 2020. If we look back to 2020, China Southern actually in terms of share price performance was down 12% versus Air China was down 23%. That means that China Southern has outperformed Air China by as much as 11 percentage points. And what about 2021? Year to date, China Southern was up 4%, whereas at the same time, Air China was down 4%. So China Southern has outperformed Air China by 8 percentage points. So far in this year, so cumulative, we're talking about almost 20 percentage points. And that comes to the question, why do we expect that Air China will outperform China Southern Air in 2021 or the rest of 2021? We have actually 5 different factors that we think they are favorable for a reversal of the performance of this trade. First of all, that includes the rebound in the international traffic. The second one is a low base for comparison, particularly for Air China. The third factor that we see is that Cathay Pacific will become a lesser burden to Air China. The fourth one, there will be smaller impact from RMB appreciation. And last one is that the concern on weaker domestic market. Now, will you go through them one on one? The first one is that we expect this year we will see a rebound in international traffic, and that would be positive towards Air China. Over the course of next couple of months, we do expect that there will be increase in the flow of positive news from COVID-19 vaccine development. So far, 62% of Israel's, about 17% of UK's, and about 11% of US population are vaccinated. If you look at before the pandemic, Air China actually derived about 41% of its total passenger traffic from international routes, whereas for China Southern is 32%. So actually, Air China has a more significant exposure to international passenger traffic. Absolute term, Air China's regional and international passenger traffic back in 2019 is also about 6% higher than China Southern, and the focus is more on longer haul traffic going to US, Europe, Australia, whereas China Southern's international route is more focusing on Southeast Asia, as well as Oceania. And now in China, we have tried 5 different vaccines are in phase 3 clinical trial. And particularly, we see that Sinopharm actually has talked about that the vaccine capacity is going to over 1 billion in 2021. We also see that the availability of vaccine will allow the Chinese students, a lot of them went back to China during the peak of the outbreak. They would return to overseas country to continue their original study. And all this will mean going to be more improvement in international traffic going forward. Secondly, we think that there is a low base for comparison for Air China. Look back into 2020, the strong recovery of domestic traffic has actually raised the bar for China Southern's traffic comparison in 2021. Just in December last year, China Southern's total passenger traffic was dropped by about 34%, and that was around 12% ahead of Air China's 46%. The fourth quarter China Southern domestic traffic actually has already returned to the fourth quarter 19 level. So that means that there leaves very small room for further significant year-on-year growth in this year. And Air China, if you look at international traffic, still they are not doing good, but the fourth quarter number in last year has already recovered by about 35% relative to the trough in the second quarter. As you can see on the chart, actually China Southern has started to outperform Air China in actually March 2020 in terms of the passenger traffic. So that would mean that actually a low base for comparison for Air China starting about like March or April this year, whereas that will become a higher base for comparison for China Southern starting next month. As for Air China, we think that even a mild recovery in international traffic, the year-on-year growth rate will be more impressive in 2021 due to the lower base that they have created most of the time in last year. The third factor is about Cathay Pacific. Actually, we do believe that CX will still be a drag on Air China's bottom line in 2021. But we expect this to get smaller with a slow recovery in the international traffic, and also Cathay has carried out a lot of cost control measures. In fact, Cathay has made quite significant progress in cutting the monthly cash burn. Initially, 2.5 to 3 billion, and in November, December, it's around 1 to 1.5 billion. So the situation is actually improving. As you can see from the chart, the peak of the loss for Air China's associate, mostly coming from Cathay, was actually happening in second quarter, and that first half is much more significant than the second half. So year on year, we do see that would improve, and that would definitely help the bottom line for Air China. And at the same time, we see Air China resuming some of the capacity, including flight to London, and that would, Cathay Pacific has resumed its flight to London on 12th of January, and then they have also launched new freighter route. So all these new services will help the company to improve the profitability or actually reduce the loss, and that would help to provide a better year-on-year comparison in terms of Cathay Pacific's contribution or reduction in negative contribution to Air China starting actually in first half of this year. The next factor that we look at is that the smaller impact of RMB appreciation. China Southern actually has the most significant exposure to RMB appreciation because they have the airline has the highest absolute amount of US dollar debt, roughly about 61 billion, compared with Air China of about 58. As you all know that the RMB has appreciated significantly, 6.5% in last year, and about 8.5% from the trough in last year. So we do see that actually further room for significant appreciation in this year is smaller. If you look at the so far in this year, well, although the RMB has appreciated, but mostly it was taken place in the first few days of this year in January. And after that, as you can see, what we have highlighted in the chart, basically it remained quite flat. It is because that we think that overall, because if you have a sustained appreciation in the RMB, that would be negative towards the Chinese economy, particularly that would affect China's export competitiveness. So we do expect that this year unlikely to be as much as 2020 in terms of RMB's appreciation, the level of appreciation. So what it means is that China Southern, while it will still book exchange gain in this year, but the gap against Air China will be narrower. So that means that they will see a smaller, marginal additional contribution from exchange gain than Air China when compared with 2020. And lastly, concern on the weaker domestic market. What we see is that if you look at the Chinese New Year, we can see that by looking at the top 5 domestic routes, actually we do see that the rate or the average fare was actually only about 855 in the first 25 days in 2021. That was actually just around 10% higher than last year. So actually that is not as significant. So that would be one thing that we are concerned about. The other thing is that although recently we do not have any, on the last 2 days, we do not have a lot of new cases, COVID-19 cases, domestic cases happening in China, but that has already negatively affected the Chinese New Year holidays travel demand as the local government discourage the cross-province travel. Air ticket price during the Chinese New Year period, we can also see that that was already down 100 yuan RMB week on week in late January. And then when compared with the normal level, like those in 2019, the Chinese New Year airfare was actually on average 200 RMB lower. So, and that was the lowest in the last 5 years. So what we see is that that will potentially reflect in a weak first quarter number for China Southern because it has the heaviest exposure to domestic route. As you can see that we all expect that there will be good year-on-year bottom line improvement. But if you look at a Q-on-Q sequential basis, we do expect that China Southern likely to have experienced a more significant pressure in terms of Q&Q contraction of the company's business and likely a more significant increase in loss in first quarter 2021 compared with fourth quarter of 2020. Now, what are the key risks for this trade? I have laid out 4 of them. The first one is definitely because China Southern has a heavy exposure to domestic air passenger route. So a significant and sharp surge in the domestic air passenger traffic in China will definitely be reported to China Southern more than Air China. So that was one of the risks of our long Air China and short China Southern trade. Secondly, if the global vaccination is low, or also the new vaccines developed are actually ineffective in controlling or actually preventing the spread of the new variant strains of the virus, that would also negative towards the international air traffic, and that would be not positive towards Air China. Thirdly, going back to our argument on RMB, if the RMB appreciate rapidly and are more significant than expected, that would also be more beneficial to China Southern when compared with Air China, and that would be the key risk, another key risk of our trade recommended. And lastly, as far as we know that Air China's parent has been put on the U.S. Department of Defense list on Executive Order 13959, and so that in such case, if Air China is also included in this list, that would also lead to some selling pressure on Air China, and that would be something negative towards this trade in the short term. So these are the 4 key risks that we have highlighted in our recommended trade. And lastly, I think just a comparison about the valuation of the 2 airlines based on the price to book multiple. Recently, China Southern has been rebounding. We see it actually back to the average price to book level since 2016. roughly about 0.9 times, actually. But for Air China, it is currently at about 0.8 times price to book, which is somewhere around the level of one standard deviation below the historical average. So when you compare these two charts, actually, we can see that in terms of the valuation comparison, Air China is also more appealing than China Southern, basically on the price to book multiple comparison. I think these are the key information I want to share with you for backing up my recommendation on long Air China and short China Southern as a 2021 high conviction call. So I'll then I think it is time for the participants in this webinar to raise any question that they have, and we can discuss about the idea of the trade. So I'll just hand it back to Michael first.
Thank you very much, Osbert. This was a very concise presentation of your idea. Thank you very much for that. As Osbert said, you are welcome to send in questions using the Q&A button on your screen. So you can do that at any time. So maybe I'll kick it off. Osbert, so you mentioned how China Southern has been performing pretty well lately. So could you elaborate a bit on the reasons for that? And when would you expect such outperformance against Air China to reverse, basically?
Yeah. Well, I think actually, if you can see that so far in year 2021, China Southern has outperformed Air China. Actually, that is actually quite significant. You're talking about 8 percentage points. But I think clearly it is the impression that this round of the local COVID-19 cases are now under control. So there will be no more cases found in the last few days, and that also raised some kind of expectation that the domestic air travel will return to normal soon. I think this is actually quite a reasonable expectation, but I do caution that the impact of the as local governments encourage there with no cross-province travel in the Chinese New Year, that would actually be quite significantly negative, affecting the domestic travel during the period of late January, almost the whole of February, and that it takes time actually for March to recover. So the first quarter result for the China Southern likely to be worse than expected. So that would be something that we should be watch out for, even though China Southern has been performing better than Air China so far in this year, particularly over the last couple of days. I think by the time of the result announcement, there will be increase in the pressure for China Southern. We will also see that, as I showed in the chart earlier, by March and April, we can see that China Southern will see a higher base for comparison, where Air China will see actually a lower base for comparison. And so that is the time that we do see that there would be the onset of the potential reversal of the performance of Air China against of China Southern's outperformance against Air China. That would be one thing that I think in terms of the timing, probably we're going to see something like in March and April. We do see that was a reversal. At the same time, we do see that the potential catalyst for the performance of Air China's will be the further increase in the vaccination percentage, and also a gradual resumption of international travel. So these are the factors that I think going into the next 6 to 9 months will be more positive towards Air China than China Southern, and that is the time that we do expect there is a reversal of the performance. So I would say taking the current moment of China Southern outperforming Air China as a good timing actually to set up the pair trade that we suggest here.
I see. Thank you very much for that. There's an interesting question from the audience, taking us back to basics a little bit. So the attendee says they are a novice and new to pair trades. So their question is, how does your recommended pair trade compare to just long Air China? What are the pros and cons of a pair trade in this case?
Yeah, I think compare with like purely longing Air China, whereas without a short in China stuff, and basically is exposure to the overall global recovery in either including both domestic and international market in the air traffic. So that was actually a bet on the, for example, the overall recovery in economy, as well as the overall rebound in the industry in terms of the overall airline industry. However, you will be exposed to overall, for example, a net exposure in terms of the increase in oil price, for example, that raised the overall jet fuel cost, and that would basically be negative towards the airlines as a sector as a whole. Whereas if you have a hedging in terms of the long Air China and short China Southern, you will basically have a more, I would say that the overall airline sector as a more neutral stance, only betting on the differential in the, for example, the air traffic makes the pace of recovery difference between international and domestic, as well as low base and high base, whereas avoiding the exposure to any individual cause as well as general yield, for example, factors that are affecting the airlines overall.
Thank you very much for that. In terms of a yield perspective in this case, how has passenger yield for the Chinese airlines trended in your view?
I think, well, although we see the traffic recovery in Chinese airlines, particularly domestic market, actually we do not see a very significant uptick in the passenger yield. If we can see back, for example, the yield performance for China Southern, as we shown in this chart, basically you can see that the yield has improved somewhat from the trough in early last year when the market recovered, but it has since then, after the peak reached in October, it has started to trend down, weakened in November, December, and up to now. So I think that this is partly because of the limited capacity constraint for the airlines, because international routes are still quite weak. They have significant room for redeployment of the aircraft in case the demand suddenly surge. And also, if we check the top 5 domestic routes for both China Southern and Air China, you can see that the average one-way fare do not show much difference when compared with last year, as shown on this chart. This is actually quite unencouraging because this time of last year is actually the trough. So we think that yield continue to be unexciting in the near term. The next hope probably is going to be the Labor Day holiday and summer vacation. But overall, yield doesn't really performing that so much. So if you even look at for the case like China Southern and Air China, actually the yield differential is not very significant between two. What we have done in terms of the checking of the top 5 routes domestically, Air China or China Southern actually is on average about like 5 to 10% lower in terms of average fare on the same route when compared with Air China. So that was also an angle to our long short strategy advocated. But I think the traffic momentum still, I think the key argument or the most important driver for our trade as suggested.
I see. Were the expectations for the Chinese New Year holiday very strong this time, or were there already reservations about how busy the period would be given the uncertainty?
Well, I think the original expectation was actually quite high, but as the new COVID case coming in, I think more significantly starting early to middle of January with the local government recommending no cross-province travel. That has actually toned down quite a bit in terms of the expectation for the Chinese New Year vacation traveling. So I think the expectation overall has actually been lower quite significantly over the last couple of weeks. But at the same time, we do see that even with such a reduction in expectation, the recovery in going the next couple of months is likely to be quite weak. As what we see is that you have already leave out a traditionally peak season in a year. So that was actually quite significantly negative in terms of the profitability recovery in 2021. And then, so expectation has been coming down, but I think that probably is still some room for disappointment in terms of the pace of the recovery after the local case has been controlled, just like what has happened in the last couple of days, that no locally or domestic case are discovered in China.
Got it. Thank you. One attendee asks, when would you expect to unwind this pair trade?
Well, I would say that based on my expectation, I would actually looking at by the end of this year, we would be actually looking at unwinding this long Air China and short China Southern trade. It is more because by that time I do see that likely we will see a good recovery in terms of the international traffic, while at the same time you will be going back to a overall improvement in the global traffic demand. And also we do see that likely the China economy continue to see good growth. And that would be a point of time that actually the domestic truck market will also see potentially going back to a better organic growth without a similarly high base. So I would actually expect by the end of this year, the potential and possibility for unwinding our recommended long Air China and short China Southern.
I see. Thank you. How does the cargo business of CSA and Air China factor into the trade? Could you say a few words about the performance there?
I think this is actually one area that China Southern has been doing better than Air China in last year. If you look at the traffic momentum, I think Air China overall cargo was down like 20-25%, whereas for China Southern, it was down about roughly about 5% in last year. So China Southern actually has been performing better than Air China in last year in terms of the cargo business. The China Southern also just completed the mix reform of the Southern Airline logistic that they introduced. Some of the strategic investor to hold about 45% stake in the cargo business. So these are actually some positive development for China Southern's cargo business. But I think that while although the good cargo business is positive to China Southern, but it would only serve as a relatively small buffer for the airline, because historically we do see that while cargo business is growing fast, but its contribution is still relatively small when compared with the passenger business. So this is a point that is positive to China Southern, but I don't think that was actually enough to revert the trend of benefit of with improvement in international passenger traffic to Air China. So of help to China Southern, but not as significant.
Got it. And maybe finally, one of the key risks that you mentioned previously was the inclusion of Fair China in the U.S. Department of Defense list. Given that there's a new administration in the U.S., do you think that there could be a change in strategy there, or does it seem like that will remain pretty uniform?
I would say it's still difficult to say. It is actually $1 million question. But based on what the latest stance of President Biden, as well as what we see in terms of their tone against China, I would say that it is more, I would say, when compared with President Trump, the current administration clearly is more accommodative to China when compared with the previous one. But it would be difficult for them to reverse everything all in one shot. So in that case, I would actually expecting that there will be some release of or potential removal of some of the names from the executive order in the future. That is the name that is less sensitive towards than the other name that is more likely to be, I would say, that remotely linked to the military of or the PLA. I would say in that case, actually, Air China's parent, China National Aviation Corporation, it looks to be a name that is relatively remotely related to the PLA or the military in China. So I would say that it is possibility that it will not be included, or actually the parent company will be removed. But this is not something that's going to happen in the very near term, because at least from the current administration's perspective, I would believe that they don't want to reverse everything in shortly within the next 1 or 2 months after President Biden assumed the presidency. Probably at the earliest that we can see is going to be second half of this year. But I would say that there is actually a possibility, and not a low possibility, for that Air China will not be included, or the parent company will be removed.
Understood. There's a couple more questions from the audience. Maybe we can spend a few minutes on those before we sign off. So one attendee says that they have heard that due to a container shortage, importers have been using air freight instead of sea freight. And does this affect your recommendation?
Mm-hmm. Well, I would say that that also ties very much to what earlier there was a question about the cargo business. Well, that would be positive towards China Southern, but at the same time, we do see that the impact may not be as significant, given that cargo business still account for a relatively small portion of the whole business mix for the Chinese airline. This is one thing, and the other thing is actually, if we look at last year, in terms of the performance of the cargo business, Air China actually has been underperforming China Southern quite significantly. On that perspective, we do see that a stronger air freight market may also potentially providing Air China a better year-on-year comparison situation. So I don't think that a stronger cargo market using air freight will actually make our recommended trade not viable.
Got it. That's pretty clear. And the other question is, from an operating cost perspective, which airline is more efficiently managed in your view? For example, using newer fuel-efficient aircrafts.
Mm-hmm. Well, in terms of unit costs, actually, we see that China Southern has been doing better than Air China. But note that it is partly because of, this is based on the number that we have in last year. But note that it is partly because that Air China, while we have a period of time which the international traffic is low, but Air China still maintains some of the international routes, even though the load factor is something like 20 to 30% as a regular service to some of the country. This is because that Air China is actually the flagship international carrier in China. So unfortunately, they still have to operate some of the routes, even though the load factor are low. So in that perspective, you will see that actually that would also increase the unit cost for the company given that the load factor are quite low, but they still have to operate it. But if you look at purely from the cost perspective, I think China Southern has been doing better than Air China. But I would say that that would be a factor that we would very much, I would say, look into once if we consider the percentage of, for example, like jet fuel being sourced overseas when compared with domestic jet fuel. That would see a important differentiation between Air China and China Southern, because given the more higher proportion of international routes, actually Air China has a bigger option to, for example, to source the jet fuel overseas than domestically.
Got it. Well, that's about all the time that we have today. So thank you everyone for sending in your questions and for being with us. And thank you, Osbert, especially for sharing your views with us today. If you would like to engage Osbert directly, please contact your Smartkarma account manager in this regard, and they will be able to help you out. And if you have any other questions, please email us at research@smartkarma.com. Osbert, thank you very much once again.
Thank you, Michael. Thank you, everybody. Thank you. Goodbye.